Good morning, grinders. It is Wednesday morning, September 17th, and we're about 7 minutes from the opening bell. And there's a couple things that I wanted to go over that were brought to my attention. So, Uber shares were down 4% less than 10 minutes ago, pre market. Why? So, Waymo, who is owned by Google, is the autonomous vehicle company. They plan to offer rides in Nashville, Tennessee, and announces a partnership with Lyft for the first time, not Uber. Now, we've seen quite a few partnerships between Waymo and Uber, but now Waymo has decided to partner with Lyft. So Lyft will invest in undisclosed sum in an autonomous vehicle fleet management facility where it will charge and maintain Waymo vehicles. So this kind of a head scratcher. I thought Lyft was kind of for dead, and maybe someone else was going to scoop up the company and buy them. And maybe Waymo was considering this, but instead we'll just invest in the company. We'll partner with the company instead of owning them outright. So Uber took a hit from this. Tesla's also been running lately too. Typically, when Tesla's running, Uber shares are down. So it could be a mix of a couple of things. Plus, Uber just hit a 52-week high. So shares typically come down once you hit a new high. Excuse me, an all-time high. Moving on, I wanted to shed a little light on Nvidia. So shares are down over 1% pre-market. The shares have been getting kicked around lately, although they're up almost 2.5% past 5 days, but down 3% for the month. So, what is the news on Nvidia? Well, Barron's is reporting that China has banned Nvidia chip purchases. A Chinese internet regulator told ByteDance and Alibaba to end testing and orders for Nvidia chips. Now, we did get a quote from CEO of Nvidia, Jensen Huang, and he states, quote, "We can only be in the service of a market if a country wants us to be." Quote, "I'm disappointed with what I see, but they have larger agendas to work out between China and the United States. I'm patient about it. Will continue to be supportive of the Chinese government and Chinese companies as they wish," end quote. Now, personally, from what we get from that quote from Jensen, we believe this ploy with Nvidia is part of trade negotiations between the U.S. and China. We are still long Nvidia shares in our long-term portfolio, and we also have options aggressively on Nvidia's future, and see this as potentially a buying opportunity, to be quite honest. Now, from this price, I would probably wait for it to be closer to like 165 or so before I get real excited. But if you don't have any shares in Nvidia, maybe take some of this negative publicity. Even though this is a fundamental issue with the company. If they're not able to sell chips in China, some of their numbers could be lower than what we were expected. Now, they did take China sales completely out of their reporting. And then Jensen, in his last earnings report, stated he was hoping to be able to sell even more powerful chips to Nvidia. So maybe this is just the beginning of those talks, and maybe Nvidia will be able to sell even more powerful chips to China. And maybe that was some type of deal the two are working on with this new deal that's come out recently about TikTok. So we'll see. We'll see how this thing plays out through the end of the year into next year. But again, we're still confident in Nvidia to be able to sell the chips that they do have to the customers that do want them right now. And we wanted to share, because of this meeting later this afternoon on interest rates. Now, Powell can come out and say we're cutting interest rates, but if his tone after explanation, while he explains why they decided to cut rates, um, makes it seem like the U.S. economy is going into the dumps, or we are at a point where things are getting a little bit worse off than we were expected, that could turn the market. So because of that, I'm just gonna show you an example. I have quite a few options calls out. Even you can do this with your shares too. Maybe some of your companies are running, they've keep hitting 52-week highs. Maybe if you're in like a Google or something like that, and this massive run has made your Google allocation a lot higher than you were expecting, or that you wanted. Maybe it's time to take some chips off the table and start selling some of your stuff that's run pretty hot. So for us, we've been in this call. It costs us $35 for the contract, or $3,500, and right now the current price before opening bell is $53 per contract, or $5,300. So we have two of these contracts, and so we're going to take one of them out. We're going to sell one of them and leave the other half, let that run, because like I said, our average cost is 35. The option price is 53, so we're up a nice little chunk, almost 2,000 per contract. So we're going to take a little bit off the table, sell this one, and look like market just opened and it just sold. We're going to take some off the table, and then if anything does happen or we see some choppiness in the market, we'll be able to execute in the coming days. Also, Friday is quad witching, and we'll touch on that. If not later tonight, we'll touch on that tomorrow. All right, opening bell is here. Hope you guys have a wonderful day. Stay tuned if you can for that Fed Chair Powell's announcement on what he's going to do with the rate cuts and his dialogue afterward.